A gold trading concept that can completely transform your journey is called the inside bar concept. First, set your chart to the 4-hour time frame. Next, identify an inside bar candle. As you can see here, this small red candle is fully inside the previous green candle, making it an inside bar. Now mark the highs and lows of this inside bar candle. After marking them, shift to a 5-minute or 15-minute time frame, depending on your preference. Once you're on the smaller time frame, identify the first move. It's important to note that the first move is always a fake move, also known as manipulation. Whether the first move goes to the low or the high, it's considered manipulation. Once the price reaches either side, we will take a trade in the opposite direction. So let's play it out. As you can see here, the price first manipulated towards the low. So we'll take a trade in the opposite direction, aiming for a 1-2 or 1-3 risk to reward ratio. And as you can see, it beautifully hit our target. Here's another example. As you can see, gold formed an inside bar candle. We'll start by marking out the highs and lows of the inside bar candle. Next, we'll shift to a smaller time frame to observe price action more closely. Now, we'll wait for the price to approach one of the marked levels. Once it does, we'll take a trade in the opposite direction. In this case, the price reached the low of the inside bar and formed a hammer candle. This is our entry signal, so we take the trade with a target of a 1-2 risk to reward ratio. As you can see, the trade hit our take profit level perfectly. Now remember, manipulation isn't limited to just the low or high of the inside bar. Sometimes the price sweeps the high or low of the inside bar and then moves in the opposite direction. So we will only enter a trade when we receive proper confirmation at the low or high of an inside bar. We can use any entry model for proper confirmation. It can either be indicator-based, price behavior and rejections, or market structure shift in 1-min or 5-minute time frame. If no confirmation is received, we must avoid entering the trade and look for another point of interest below the low or above the high of the inside bar. This is because we know the initial move is always a manipulation and the market needs to move against this manipulation. Potential points of interest to consider below the low: fair value gap, FVG, order block, or supply and demand zones. By focusing on these elements, we can identify high probability trade setups while avoiding unnecessary risks. We can use the previously mentioned entry confirmations at these levels to confirm entry. So here's an example. As you can see, this small red candle that it is inside bar candle. Now we will mark out high and lows of this inside bar candle and we'll move to smaller time frame. Now we will wait for price to reach at any of our level. As you can see here, price first reached towards the low, so we will be looking to buy, but price didn't give any confirmation and swept the low. Now we will find out any point of interest that I mentioned before. As you can see here, we have 5-minute FVG, so we will mark it out. Price reaches to FVG. We will enter when this high gets broken, indicating market structure shift, and we'll place our stop loss below the FVG. So let's play it. As you can see, it beautifully hit our target. Here we have another example. As you can see, this is an inside bar candle. We will mark out the highs and lows of this inside bar candle. After that, we will shift to the 5-minute time frame. Now we will wait for the price to manipulate toward the high or low. As you can see, it reaches the high, so we will be looking for a sell. But it didn't give us any entry confirmations indicating that it swept the high. Now we will look for any point of interest above the high from which the market can expand toward the downside. As you can see here, we have a 5-minute FVG, so we will mark it. Now, as you can see, the price reaches the FVG and it broke this low as well, giving us a market structure shift. So we will enter here with our stop loss above the FVG and take profit as a 1.2 risk reward ratio. Let's play it out. As you can see, it beautifully hit our TP. So in this way, we can trade with 80% accuracy. I have a Discord server where I have already uploaded this whole strategy. And if you have any doubt about it, you can ask in the comments or simply join my Discord server and ask me there. Moreover, we also arrange exciting giveaways in Discord, so make sure to join. Thanks for watching. Don't forget to like the video and subscribe to the channel.